So this lesson is going to be on market structure. So when you say market structure is simply the building blocks that hold price when price is going up continuously, and it also holds price down when going down continuously. Okay, let's look at some importance of market structure. First of all, it will help you identify your current trend or direction to trade to. Okay, so if the market structure is going up, you want to be focusing on what? Being in the up movement. So you want to be focusing on buying your way up. Okay, you don't want to be concentrating on sales, because if you are continually going up, you want to be a part of this upward movement. And then it will also help you identify which liquidity pools to target. Now I will talk about liquidity in another video, but just a brief explanation of liquidity in forex trading. Liquidity is simply money, okay, where the money is resting in the market, and money is resting above highs and above lows. Okay, I want you to take that for now. Okay, liquidity rests above highs and lows. So let's say this. Okay, there's liquidity here, there is liquidity here, liquidity above this high, liquidity below this low. So simply, as I explained, liquidity is just money. Where is the big money resting? There is money resting here. Why is there money? Why is it that money is resting above this high? It's simply because some people sold from here to here. They placed their stop loss there, and that's the money resting there. Why is money resting below this low? Because some people bought from here to here. Their stop loss is here, and so that's the money resting there. Okay, so in the market that is going up sustainably, we want to be buying, and then we want to be targeting liquidity pools of the highs. So if you are going up sustainably, the highs are always the target and the lows are protected. If you are going down sustainably, like in this case, we want to be what? Selling, and our target is the lows, because sustainably we are taking liquidity off the lows and the highs are protected. Okay, the highs are being protected, so we want to be trading with the trend, and it helps us to identify which liquidity pools to target. Okay, so that's two importance of market structure. So we are going to start with our first type of market structure. That's the bullish market structure or bullish trend. Okay, so what we are saying is that in the bullish market structure or trend, price makes a series of higher highs, abbreviated HH, and then higher lows. So let me quickly explain this. Okay, in a bullish trend, price continuously goes up. Okay, and then as it goes up like this, it makes a higher high. This is a higher high because it is higher than this high. Okay, and it makes what? Higher lows. You see, this is a low that is higher than this low. Okay, so higher low, another higher low, because this higher and this low is higher than this. So in a bullish market structure, price makes series of higher highs, highs that are continuously higher than the previous highs, and then lows that are sustainably higher than the previous lows. Okay, so that's for a bullish market structure or a bullish trend. This is the characteristics of a bullish market structure. Now, in a bullish market structure, we want to be focusing on buying opportunities. Okay, we want to be buying the trend up. We don't want to be selling, because the sales are going to just be a corrective impulse, a corrective wave. Okay, the sales are just going to be short term, the buys are going to be long term. Okay, so you can take a buy here and then you are very much hopeful, like 65 to 75% hopeful that there is high probability that as you are buying from here, market will come and clear this high. The same here, you have about 70% hope or prediction that, or bias that as you buy from here, price will come above here and it won't come below here, because sustainably we are going up. So this is the characteristics of what a bullish market structure: continuous or sustained higher highs and higher lows, highs that are higher than previous highs and lows that are lower than previous lows. So let's look at a bearish market structure. So for a bearish market structure, price continuously makes a series of lower highs and lower lows. Let's quickly check that. So you can see this low, it is lower than the previous low, so it is a lower low. You see this high, it is lower than the previous high, so it's a lower high. And so in a bearish trend, price sustainably trends lower highs and lower lows. If you see this in price, you know that market is in a downtrend or a bearish trend. Okay, when you say bearish, trend is going down. When you say bullish, trend is going up. This is the characteristics of a bullish trend. This is the characteristics of a bearish trend. Now in a bearish trend, you want to focus on what? Selling, and then your target is the lows. Okay, your liquidity target is the lows, as I explained earlier on, that liquidity rests above highs and lows. But in this case, you can see that sustainably we are clearing liquidity below lows. So as price break this low, pulls back, and you get in a sell here, your target is the liquidity below these lows. Okay, so the importance of market structure is it helps you to identify the trend or the direction so that you can be in that move. It helps you to know where to take your profit or your target pools of liquidity. Now, market would not always be going sustainably up or sustainably low like you see in this case. Sometimes market will simply have no direction, and that leads us to what? Consolidating structure or consolidating market. Okay, simply a consolidating structure, price moves in a range. There may be a level down up here, as you see here, and a level down here, and price continuously will bouncing up and down within that range, not going up, not going down, just bouncing up and down within that range. So when you see the price is continuously bouncing back and forth within a range like this, we say that the price is not in a trend, it is just consolidating. Okay, and normally in a consolidating market, you see price taking highs and lows. It's not like in a bearish trend where you see continuous or sustained break of the lows. Here you see a break of a low, a break of a high, you see a break of a low, you see a break of a high, a break of a low. So no direction, it's just bouncing up and down within this range. Okay, so in a market like this, we want to be what? Selling at resistance. Okay, we focus on buying at support and then selling at resistance. And we say resistance it is any place in price that keeps price from going up. Okay, it suppresses price. Whenever price gets there, okay, it moves down from it, it goes drastically down away from that resistance level. And we say a support level, price gets to a level and then it holds it up. Okay, it prevents it from going down. So we can see that here was a support, it bounced off from this level. Here support, it bounced off, support, it bounced off, support, it bounced off. So in a market like this, whenever price comes to the lower regions, you want to be buying, and that's your support level. You want to be buying. When it comes to the uppermost region where your resistance is, you want to be selling. Okay, selling. to go down, and your target is always at the lower portion or at the middle of the range. Let's say if you get a sell here, you can take your profit in the middle of the range or down the range. If you get a buy here, you can take your profits in the middle of the range or at the high of the range. As simple as that. Okay, now our next our next thing to discuss is trend reversal. Okay, so no market will go up forever and no market will go down forever. At some point in time, when market is going up, it will find a resistance which is very strong, and it will completely turn price in the opposite direction. The same way, if price is going down, at a certain point in time, it will find a support and completely reverse to the upside. And so for a trend reversal, it is characterized by two things. Okay, very important. It is characterized by two things, and the first thing that it is characterized by is a market structure shift. Okay, and the abbreviation is MSS. You can also say a change of character. We say a change of character, it means that the behavior of the price has changed. You see, in this case, we keep on taking highs and the lows are protected. Okay, so we are taking the highs, and at this point we take a low. It means the behavior of price has changed, the character has changed, and so that's the name, the change of character. We can also say market structure shift, MSS. Okay, now for us to confirm that really this uptrend has changed, because mind you, we've taken highs 1, 2, 3 so many times. Is this just one shift going to make us believe that the market is going to go down entirely? No, because sometimes I can just take liquidity below this low and continue going up. So for us to trust that this is a real market structure shift and the trend, the bullish trend is over and now we are shifting bearish, it needs to first change character, or it needs to first shift market structure, and after that it should follow by a break in market structure, and it is abbreviated by BMS. Okay, so the first shift or the first break we say is a market structure shift or a change of character chalk, and then the second break, so as we break this and we pull back and we break again for the second time, we say we have a break in market structure. So the break in market structure confirms that this bullish trend, okay, has now shifted to what? A bearish trend. And so instead of price making higher highs and higher lows, now price is making what? Lower highs and lower lows. Okay, as I discussed in a bullish and a bearish trend, higher highs, higher lows, lower highs. Okay, and so this is the scenario of a bullish to a bearish trend change. Okay, so this is also the scenario for a bearish to a bullish trend change. So here we are bearish. From here we are printing lower lows and lower highs, and at this point we made a higher high above this high, and the first time this happens we see it's a market structure shift or a change of character. For us to confirm that really this bearish trend is over, we need price to pull back and then break for the second time, and at this point we can confirm that this bearish trend is actually over, and now it has shifted from bearish to a bullish trend. As simple as that. So the second shift is what we call the break in market structure. The first shift is what we call the market structure shift or a change of character. Now let's go to the charts for real data examples. This is the pound USD. I'm gonna mark few structures here, and you can see that we've been going down. We've been making a series of let me use this tool. making a series of lower highs and lower lows. Okay, lower highs, lower lows, a series of them. But let me get really into it and mark it up for you. Okay, so you can say that we broke the structure here. Okay, and that gave us what we call it, a lower low, right? This is a lower low because it's lower than the previous low. Okay, and we say this is what a lower high. We say this is a lower high. Okay, and then at this point we pull back and then we break structure again from here. Okay, making another lower low, as simple as that, and then another lower high. Okay, so you can see that the highs are being protected and the lows are being broken sustainably. Okay, so at this point we pull back to this level, we break this low, and then we make a lower low again. You see how the lows are sustainably lower than the previous lows and the highs are sustainably lower than the previous high. Okay, so once again we pull back to this level, then we broke structure again here, and what do we make? A lower low and a lower high. But let's look at what happened here. As I told you, no trend move forever. At some point it's gonna hit a higher time frame level and then change direction completely. So you see that we broke this low, we pull back. So this was supposed to be a lower high to then make a lower low. You can see that after it pulls back, it failed to break this low to make a lower low like we are seeing here. So we pull back, it did make the lower high, it made a lower high, but it failed to come and make the lower low here. Instead it went up and broke the lower high. When we see this happening for the first time, we say this is what? A shift in market structure, or market structure shift, MSS, or you can use change of character. Okay, now for us to really confirm that this bearish trend is entirely over and now you are going to be bullish, we need the second break. So you can see that we pull back and then we break again here. So when we see this happening, this is what? A break in market structure, BMS. So when you have our BMS, now we know that the trend is now bullish. It has shifted from bearish to now bullish, and now price is gonna make higher highs and higher lows. You see, this is a higher high. You see why it's a higher high? Because it is higher than this previous high. So it continuously prints higher highs, continuously breaking highs. Okay, and you can see it is what? Making lower highs as well. So let me get that. Lower highs. Okay, it's a lower high because you see it is lower than this, the higher low, sorry. A higher low, HL. Okay, higher low. So this is a higher low because it is higher than the previous low. This is also a higher low. So this is the characteristics of a bullish trend. series of higher highs and higher lows. All the highs are higher than previous highs, all the lows are higher than previous lows. Okay, good. And then let's see what happens here. Let's see what happens here. At this point, what do we see? We see a change of character or a shift in market structure shift. MSS, market structure shift. And what did I say? For you to confirm that a trend has really shifted, you need the trend to have a change of character or a market structure shift followed by a break in market structure. Now forget about what is here, okay? Just focus about what I'm teaching. So after the market structure shifts, look at what we had here. We pull back, it was just some small pullback, and then we had a break in market structure, okay? BMS. Okay, so after this break in market structure, you can see it pulled back a little to this level and it sold off, and we took this level again. Okay, we took this level. So after this trend had confirmed bearish on two shifts, it pulls back into the range, into the last high. This is our protected high. Okay, we are making series of this was our last higher high, and at this point we made what? A lower high. We made a lower, we broke down and made a lower high here. Okay, and after making a lower high, it made what? A lower low. Characteristics of what? A bearish trend. So means the bullish trend is now over, and now we have shifted to what? Bearish. And it made another lower low here. So you can see that at this point we are making lower lows, and clearly the structure has shifted from bullish to bearish. Sustained break of lows. So after this confirmed break in the market structure, it pulls back into this range. It sold from here to here, and as I said, when you are selling, your target is in a bearish trend, your target is the lows. That's your liquidity pool target. Okay, so if you sold from here, our target is this low, and then you can see we smashed it. And then we had a change in character again. So market can keep changing direction over and over again. It's not going to be in one direction forever. So after this break, which is a market structure shift and a change of character, it's followed by a break in market structure here. And now the trend at this point had shifted bullish. Okay, change of character at this level, it pulls back into the range, it breaks market structure again. When it pulls back into this range from this low to this high, as it pulls back, you get a buy, you buy, and that's your trade. And then you see that it went up and then it shifted bearish again. So the structure keeps shifting or keeps changing. It's not always gonna be in one direction. As I said, markets don't trend forever. Okay, so you always want to be at the current side of the market. If the market is constantly making higher highs and higher lows, you want to be buying. And you can see that in a bullish trend, okay, the upward move are always impulsive. When I say impulsive, they are strong. They come with huge movement. You can see this candle, see how huge they were. Okay, huge, and see the cells, very corrective, very lethargic. You don't want to be in this situation trying to sell. You want to wait patiently for it to pull back, and then you get an entry to buy. You want to be in this nice bullish moves. Now, the same way for a bearish trend, you want to be in the sells, not in the buys, because the buys are going to be like lethargic and very corrective. You can see how nice the sells are. Strong impulsive waves coming down. Strong impulsive waves coming down. You don't want to be in this little buys. Okay, it will hurt your emotions, your psychology, and your mental capital. You want to be in these strong moves and not this little buys. So you always follow the trend. As the saying goes, the trend is your friend. The trend is your friend. So I'm gonna bring the next lesson, which is advanced market structure. Okay, so in this market structure, we only discussed one straight market structure, but in this move down on a lower time frame, this is the daily chart. On a lower time frame, you are going to see small structures within this. You're also going to see small structures within this. Okay, so this move going up on the daily is just one straight move, but on a lower time frame, you're going to see small moves, higher lows, higher highs within it. This move coming down, the same thing, you're going to see small moves within it. We are going to discuss that in the advanced market structure, and that will be lesson 2. So for your assignment, go to your charts, mark up highs and lows in the higher highs and higher lows in the bullish trend, mark up lower lows and lower highs in the bearish trend. You have to practice for it to stick to you, so that I can really easily pop up to your eye whenever you open your charts.